You know, what happens when the most innovative company on the planet is expected to literally reinvent the wheel? Every single year. It is a massive, massive level of pressure. Every fall, millions tune in, analysts get their notepads ready, and the entire tech world pretty much holds its breath for Apple's newest launch. And yet, almost without fail, the reaction is completely split. Half the internet calls it groundbreaking, and the other half just yawns. Today in this explainer, we're diving deep into this crazy product launch pressure at Apple and exactly how they handle the heaviest expectations in the business.
Because, let's be real, this is the exact question that completely floods social media after every single iPhone event. Is this real innovation or just another incremental upgrade? It turns out, this right here is the ultimate expectation trap. For a massive company like Apple, answering this isn't just about coming up with a catchy marketing slogan. It's a super high-stakes strategic balancing act that dictates the future of their entire business.
Okay, let's dive into this. First up, we'll examine the Apple expectation trap. Second, we'll look at the push for radical innovation. Third, we'll uncover the power of incremental upgrades. And finally, we'll break down Apple's strategic balancing act.
All right, let's start with part one, the expectation trap, and that relentless pressure to deliver annually.
So you gotta remember, Apple operates in this insanely competitive tech space. Like, standing still? That is literally the exact same thing as moving backward. This annual release cycle we see every fall isn't just some fun tradition or a media spectacle, it is an absolutely critical business mechanism. Apple has to constantly hit three major targets. They need to maintain massive revenue growth, retain fierce customer loyalty, and of course, stay ahead of their rivals. Skipping a year simply isn't an option. If they did, customers might jump ship to competitors and Wall Street investors would completely panic over the stalled revenue.
But here is where it gets really fascinating. Put yourself in the CEO's chair just for a second. True breakthroughs, they take an immense amount of time, huge risks, and literally billions in investment. So, you face this brutal dilemma. Do you risk it all to deliver radical innovation every 12 months, or do you play it safe with consistent, incremental improvements? It's a seriously tough call when the entire world is watching your stock price.
Which brings us to part two, the push for radical innovation, or basically, swinging for the fences. Now this is the glamorous side of the tech world, right? Aiming for that absolute, undeniable glory of completely shifting the landscape. When we look back at Apple's history, their massive success has really been driven by these giant swings. Think about the iPhone, the iPad, the Apple Watch. These products didn't just casually update an existing category. They wiped out competitors like BlackBerry overnight and completely redefined how we live and communicate. And the business upside of these breakthroughs? It's staggering. Radical innovation lets Apple basically conjure entirely new product categories out of thin air. And by being the pioneer in a brand new space, they get to command massive premium pricing. Crucially, it cements their reputation as the undisputed leaders of the future, which strengthens their brand in a way that literally no marketing campaign ever could.
But hey, let's bring it back down to earth for a minute, because swinging for the fences is incredibly dangerous. First off, there's high uncertainty. You simply don't know if a brand new gadget is actually going to catch on with the public. Second, you have massive development costs. We're talking years of top-secret R&D and billions of dollars spent before a single unit is ever even sold. And finally, delayed adoption. Even if the tech is totally mind-blowing, consumers just might not be ready for it right away. So while radical innovation is amazing, it carries severe financial risk. So if swinging for the fences every single time is just way too risky, what's the alternative? Let's move to part three, the power of incremental upgrades. You know, incremental upgrades are kind of the unsung, totally unglamorous heroes of the business world. Think about your standard annual iPhone update. What do we usually get? Usually a slightly sharper camera lens, maybe an extra hour of battery life, a marginally faster processor. When critics complain on Twitter, where is the real innovation? They are usually pointing at these exact features, dismissing them as completely boring. But financially speaking, actually, those quote-unquote boring updates are a complete superpower. They provide highly predictable revenue, incredibly stable upgrade cycles, and vastly lower risk. Look, Apple knows that millions of people simply need a new phone this year because, well, they dropped it and cracked their screen on the sidewalk, or their battery finally just gave out. By offering safe, highly reliable updates, Apple guarantees a massive, low-risk return year after year. But you see, this creates the ultimate brand dilemma. If you lean too heavily into radical innovation, you face super unstable returns, where just one flop could cost you billions. But if you lean too far into incremental improvements, you suffer the dreaded perception of stagnation. Consumers demand that Apple leads the future, but they also want a perfectly reliable phone that they can buy today. You just cannot simply pick one or the other.
Which brings us to our final section, Part 4, Apple's Strategic Balancing Act and their hybrid approach.
So how do they actually survive this expectation trap year after year? Well, the secret is this highly calculated method called strategic layering. Instead of just choosing a lane and sticking to it, they balance those annual incremental upgrades with periodic breakthrough innovations. They are literally layering safety right on top of disruption, pulling the levers exactly when they need to.
And this brilliantly illustrates how they pull it off. Notice how they manage these two tracks at the exact same time. On one side, they feed the market with those safe, predictable annual updates, the familiar camera bumps and battery tweaks. But while they do that, they interleave occasional major shifts. We're talking massive leaps, like introducing Face ID, the massive transition to Apple Silicon, or entirely new computing paradigms like the Vision Pro. Basically, the safe updates fund the massive breakthroughs that are happening quietly in the background.
So this hybrid approach, it just perfectly threads the needle. It allows Apple to maintain absolute revenue consistency, it strictly manages their financial risk, and critically, it allows them to drop true, radical innovation onto the market exactly when the technology and the consumer is actually ready for it. If there is one absolutely crucial insight to pull from this whole explainer, it's this. Sustainable innovation is not constant disruption, it is controlled, strategic evolution. The absolute most successful companies in the world, they don't reinvent the wheel every Tuesday. They innovate when it matters most, and they incrementally evolve the rest of the time.
Which brings us to a final thought for you to take away today. The next time you're watching a keynote and you see what looks like a tiny, maybe even a boring upgrade, I want you to challenge your first reaction. Ask yourself, is this really a lack of innovation, or is it actually a masterful, deliberate strategy playing out right in front of us? Keep that in mind next September. Thank you so much for joining me for this explainer. Keep exploring and keep learning.